Top three things in my notebook today. Number one, the yen, Japanese yen being. Number two, the price of oil. And number three, the S&P 500, which everyone needs to know about right here and now. So first on the Japanese yen, it was a textbook bounce to the oversold line versus dollar go upside down. It was overbought, so you short the yen on that. And again, that was on Monday. And again, you have no downside support to 121 and change for the yen. So on that, what you obviously get is the correlated move of the Weimar Nikkei. The Weimar Nikkei was up a full 1.7% overnight, and we still do like that playbook move from a time and price. So again, we're not going to mince any words that Japan is some kind of an economic miracle or anything like that. What we're going to say is we know how to trade the market that we're in. So again, you short yens, you buy Nikkeis. We've been more on the short side of the yen than anything else, but you already know that. Point number two, just looking at the price of oil, we're finally starting to signal, or at least today, we signaled a higher low. Now maybe tomorrow you signal a lower low, but today, the Bayesian process, the prior says, Keith, you have indeed a higher low. Higher lows, by the way, on the margin in the very short term are bullish, and again, in as much as lower highs are bearish over the intermediate term, still the point here is that you have a big counter trend move to oil rising both yesterday into the close and this morning. Things like Brazil up a full 3%, Russia up a full 5%. So again, the current risk range, watch it closely, for WTI crude is 47.22 to 52.63. Then finally, the S&P 500, again, textbook bounce off the oversold lows. What we wanted you to do was sell some of those bonds and buy the domestic consumption components of the U.S. stock market, whether it was Bloomin' Onion, Restoration Hardware, Apple, go down the line. We had consumer staples, consumer discretionary. That's where we want to be. We'll go through this on the Q1 macro call, but we don't want to own them at every price. Again, on the bounce to 2046, what'll be interesting in the S&P 500 is if they fail at 2046 and the jobs number is bad tomorrow, I think you can go back to the more kind of drawdown type action that we saw in 5 out of the last 6 trading days. So those are your top 3 things.